You've been told your whole life that the smartest thing you can do with your money is buy a house, that renting is throwing money away, that owning property is the ultimate sign of financial success. But what if this belief is not just incomplete, but in many cases dangerously wrong? What if the dream of owning your home is actually keeping you financially stuck, blocking real opportunities and creating a weight you didn't plan to carry? The truth is, buying property can be one of the best decisions of your life or one of the worst. And the difference depends on something most people never stop to evaluate: context. Not emotion, not tradition, not pressure. Context. Let's break down what no one talks about when they push you toward home ownership. The first problem starts before you even sign the contract. Most people decide to buy a house because they feel they should, not because it makes financial sense. It's a social milestone, a symbol of adulthood, a stamp of approval from society. But symbols don't pay bills. The house you buy with pride can easily become a source of stress, limitation, and regret if the decision wasn't based on clear financial logic. The real issue is that buying a home demands much more than the down payment. It demands liquidity you might not have, flexibility you might need, and stability you might not be ready for yet. When you buy a house, you lock a large portion of your wealth into a single illiquid asset. That money is no longer available for emergencies, opportunities, investments, or pivots. If you lose your job, need to relocate, or face a medical crisis, that house doesn't help you. It's stuck. You're stuck. And selling it quickly usually means selling it poorly, at a loss, under pressure. This is what people don't see when they romanticize home ownership. They see the keys. They don't see the trap. And it's not just about liquidity. It's about cost. The true cost of owning a home is far higher than most buyers realize. There's the mortgage, yes, but there's also property tax, homeowners insurance, maintenance, repairs, HOA fees in some cases, and the opportunity cost of the capital you tied up. When you add it all together, owning a home can easily cost more per month than renting a similar property, especially in the first 10 years of a mortgage when most of your payment goes to interest, not equity. People say renting is throwing money away, but paying interest to a bank for decades isn't throwing money away. The logic breaks. Let's be clear, renting is not financial failure. Renting is a tool. It gives you mobility, predictability, and freedom. It allows you to invest the difference between rent and ownership costs into assets that grow faster and more reliably than real estate. It lets you move for better jobs, better opportunities, better life conditions without the friction of selling. Renting becomes a problem only when it's paired with financial unconsciousness, when the money you save by not owning is wasted instead of invested. The issue isn't renting. The issue is what you do with the margin. Now, does this mean you should never buy a house? Of course not, but you should only buy when it makes sense. And that means answering a few hard questions first. Do you plan to stay in that location for at least 5 to 7 years? Can you afford the true monthly cost without stretching your budget? Do you have an emergency fund that remains intact after the down payment? Is your income stable and likely to remain so? Are you buying a property that will hold or increase its value? Or are you buying based on emotion? If you can't answer yes to all of these, you're not ready. And that's okay. Readiness isn't about age. It's about alignment between your finances and your life stage. One of the most dangerous patterns in personal finance is buying a house to start building equity. This sounds smart. It feels responsible. But equity doesn't feed you. It doesn't pay your bills. It doesn't give you flexibility. Equity is theoretical wealth until you sell, and if the market drops, or if you're forced to sell before the property appreciates, that equity vanishes or turns into loss. You can't eat equity. You can't spend equity without debt. And building equity while sacrificing liquidity, mobility, and peace of mind is not a win, it's a trade-off, and not always a good one. Another trap, buying a house because the market is good or because interest rates are low. These are external factors. They matter, but they're not personal. A good market or low rates don't make buying right for you if your situation isn't ready. You don't buy a house because the economy says so. You buy because your life, your income, your goals, and your numbers say so. Otherwise, you're making a decision based on noise, not clarity. And noise leads to regret. Then there's the emotional weight. The house becomes more than a financial asset. It becomes identity. It becomes proof. It becomes the thing you defend, even when it's hurting you. You hold onto it when you should sell. You pour money into it when you should walk away. You sacrifice opportunities because I own a home feels like success, even when the numbers scream otherwise. This is the brick myth, the belief that owning property is inherently better, always, no matter what. It's not. Let's talk about timing. Many people buy their first home at exactly the wrong time in life, early in their career, when income isn't stable, before they know where they want to live long term, before they understand their own financial behavior, before they've built a solid safety net. They buy because they feel pressure, because friends are buying, because family says it's time. And then they realize they're trapped in a city they want to leave, a job they can't quit, or a payment they can't afford. Timing isn't just about the market, it's about your life. Here's what most people miss. Real estate is not a guaranteed investment. It can be a great one, but it's not automatic. Property values can stagnate, neighborhoods can decline, maintenance costs can explode, the market can crash. And unlike stocks or other liquid assets, you can't diversify easily, you can't sell a piece of it and you can't move it. You're all in on one bet in one location. That's concentration risk, and concentration risk is dangerous, especially when it's your largest asset and your home at the same time. The myths around home ownership are so deeply embedded that questioning them feels rebellious. But rebellion isn't the goal here. Clarity is. You need to see the full picture. Owning a home can be powerful. It can provide stability, predictability, and yes, long-term wealth. But only if it's the right home, at the right time, for the right reasons, with the right financial foundation. Anything less, and you're not building wealth, you're building risk. So, what does smart home ownership look like? It starts with preparation. You have 3 to 6 months of expenses saved, separate from your down payment. You're buying a property you can afford comfortably, not one that maxes out your approval. You plan to stay there long enough to absorb the transaction costs and benefit from appreciation. You're buying in a location with strong fundamentals, job growth, good schools, infrastructure. You're not buying to impress anyone. You're buying because it fits your life and enhances your financial position. That's the difference. And if you're not there yet, rent. Invest the difference, build your foundation, increase your income, clarify your goals. There's no shame in waiting. There's no failure in choosing flexibility. The only failure is making a massive financial decision based on pressure, tradition, or ego. That's when buying a home becomes a mistake. Not because home ownership is bad, but because the decision wasn't yours. It was borrowed, and borrowed decisions lead to borrowed problems. The biggest lie of the brick myth is that renting is temporary and owning is permanent. But life isn't permanent. Careers change, families grow, priorities shift, cities rise and fall. The idea that you should lock yourself into one place, one payment, one asset for decades, before you even know who you're becoming or where you're going, that's not wisdom. That's rigidity, and rigidity breaks under pressure. Here's the truth no one wants to say out loud. Many people who own homes are financially worse off because of it. They're house rich and cash poor. They can't invest, they can't pivot, they can't take risks that could grow their income or improve their life. They're stuck maintaining, repairing, paying, waiting, and they convince themselves it's worth it because, at least I own. But ownership without freedom isn't success. It's a different kind of trap. Let's address the most common rebuttal. But rent goes up every year. True, but so do property taxes, insurance premiums, maintenance costs, HOA fees, mortgage interest in some cases if you have an adjustable rate. The idea that ownership is static and renting is volatile is false. Both have rising costs. The difference is, when you rent, those rising costs are predictable, and you're not responsible for a new roof, a broken furnace, or a flooded basement. When you own, you are. And those costs are never small, they're never convenient, and they're never optional. Another lie, you're building equity with every payment. Not really. In the first decade of a typical 30-year mortgage, the majority of your payment is interest. You're building the bank's wealth, not yours. Equity builds slowly, and only if the market cooperates. If the property value drops, you're underwater. If you have to sell early, transaction costs eat your equity. If you refinance, you reset the clock. Equity isn't guaranteed. It's conditional, and conditions change. So what should you do? Evaluate honestly, not emotionally. Look at your income, your stability, your goals, your timeline. Run the numbers. Compare the total cost of owning versus renting in your market. Factor in opportunity cost. Consider what you'd do with the down payment if you invested it instead. Think about where you'll be in 5 years, 10 years. Ask yourself, am I buying this house because I want to, or because I feel like I should? That question matters more than you think. If the answer is pressure, pause. If the answer is clarity, proceed. But proceed with eyes open. Know what you're signing up for, understand the trade-offs, accept the risks, and make sure the house serves your life, not the other way around. Because the goal isn't to own a house. The goal is to build a life that's financially sustainable, flexible, and aligned with who you are and where you're going. Sometimes a house supports that. Sometimes it suffocates it. The brick myth survives because it's tied to identity. Owning a home feels like proof that you've made it. But made it where? Into debt, into obligation, into immobility. Real financial success isn't about what you own. It's about what you control. And when a house controls your choices, your cash flow, your future, that's not success. That's surrender. The real question isn't whether you can buy a house, it's whether you should. And that answer is personal, specific, and honest, not universal. Here's the shift. Stop seeing home ownership as a milestone and start seeing it as a strategy, a tool. One option among many, not the option, not the right option for everyone, not the ultimate goal, just a choice. And like every financial choice, it has pros, cons, costs, and consequences. Evaluate it the same way you'd evaluate any other major investment. With data, with logic, with context, not with emotion, not with tradition, not with pressure. If you buy a house and it aligns with your finances, your goals, and your life stage, it can be one of the best moves you'll ever make. But if you buy because you think you're supposed to, because everyone else is, because renting feels like failure, you're setting yourself up for years of regret, stress, and limitation. And no amount of equity will fix that. Because the problem isn't the house, it's the decision behind it. The freedom to choose when, where, and why you buy is more valuable than owning something you're not ready for. And the discipline to wait until the conditions are right is more powerful than rushing into a decision that looks good but feels heavy. Home ownership isn't the dream. Financial clarity, flexibility, and control, those are the dream. And sometimes renting gets you closer to that dream than owning ever could. So before you sign anything, ask yourself, is this house going to free me or trap me? Is this decision based on my reality or someone else's expectations? Am I ready for this? Or am I just tired of being told I should be? The answers will tell you everything you need to know. And if the answers aren't clear, that's your answer. Wait, build, prepare, and when the time is truly right, you'll know. Not because someone told you, but because the numbers, the timing, and your life all line up. That's when you buy, not before.